All right, stock market, S&P 500. This is a short-term view in what I believe is a coming range in the stock market. So this is a consolidation, I believe, that's ahead of the bullish market. The reason I call it bullish is because if you watch the special that I put out at the beginning of the year, I talk about the bull market that I expected to come this year. That I believe was a cyclical bull market that lives within a secular bear market. You can get more details about that by watching that. It's free on YouTube, and it's been posted for our members, so it's a two-parter. One came out the end of December, one came out the middle of January, and I think it's just absolutely a great watching, and you'll learn so much about our style of analysis looking at that. You'll see in there the amazing work that we did and how the markets are very closely following mostly what we said here at the end of the year for so far the first quarter of this year. So I think you'll enjoy watching that if you haven't seen it before. We're going to take a look as we move over into the S&P 500. So this is the S&P 500. And again, we do cycle analysis for those of you that are brand new. On the bottom here are the cycle brackets. Those are our guides to the cycle analysis. And you get a good sense for excuse me, how there are rhythms in the market. Looking at this, let me just get my arrow here, and you can see right in here that the cycle bottoms are designated by these vertical lines right there. There was another one right here. I didn't put that line in. Let's just grab this right over here so that you can see where that is. I'm just going to move that over. This was where that low was, right over there, pretty much spot on. And then there's another low due right over here. So some of you, or a lot of you, watched last week's show, and I talked about a range coming in the stock market. And I also talked about the fact that I thought the data was coming out and it might get it to pop up a little bit more in here. And it actually lasted a few days longer. Now, what does that mean? Well, that means that you can see in here the minor cycle right in here. It actually was really bullish. It didn't come down very far. This one was more readable. You can see there, here, and here. And this one right in here, well, maybe it was right here, getting this rally right there, and now getting into this corrective period. Now, something changed slightly in here. First of all, you could see it got a little bit above where that resistance was, that 50% retracement, but then failed. It really couldn't hold that very well. And what it leaves here is a shorter period of time for the correction. When you get a powerful upside swamping in what we call a right-hand translation, that's the RH translation, that means that the peak in the cycle is way on the right side. Now, I want you to see, this is a good cycle lesson. You can see here the peak in the cycle was way on the right side here, and then it only corrected for 5 days and then began to move up again. Now, this was unusual in that the peak of that cycle was on the second day, and when it broke that low, well, it set up the decline all through this period right in here. So this is the key. You see here only about 4 or 5 days of the decline right there, 5 days. That's pretty similar to what we're seeing right over here. So what we're looking for is a down week for the stock market next week, and then another move to the upside. Now, the range that we're looking at in here is slightly upgraded, and that is, first of all, when you only have a few days left in here, you could get support here in the slim ribbon. You see that it did that right over here where it got down to the slim ribbon. If you want to get the slim ribbon, it's free. You can write to Matt at askSlim.com and he'll tell you all the ways to get that. This is, it might only come down to the support at 40.64. And overall, the range that we're looking for here in the market, we're just going to upgrade it a little bit right now. 40.25 up to where it made this peak right over here at about 41.65. That pretty much looks like where we're going to be for coming weeks. So our short-term view basically is that it will pull back in here, get support somewhere between the bottom of the slim ribbon, 40.65, and this level here about, we'll call that 40.30 right now. And then after that, get another move back up to test these levels. I don't expect it to be a deficient move like it was back over here. I would expect it to be able to come in here and get up here and test those highs around 41.50-ish again. So a move down over here, 40.65 to about 40.30, and then a move back up over here. That's what we're really looking for the coming, we'll just call it 3 weeks during this period over here. That makes this area right over here a buy zone and likely to pull down right over here and then be able to get up there and test those levels again. That's it. That's a look at the stock market, the S&P 500, our short-term view. I want you to remember that we have this amazing workshop special going on that you can learn this style of analysis, and I think that you will just be blown away by how different you look at markets. I get a lot of very special emails from people that have taken this workshop and say how it changed their entire way that they look at the markets and how much better that they understand the markets. This is just an amazing opportunity. I've been a trader now for almost 49 years, around 49 years, and I've spent the last 47 years working on cycle analysis, and it changed my life, and I believe it will change yours in the way that you can use this work, even if you do your own analysis, and how this will overlay the type of analysis that you do. It doesn't mean you'll do anything a lot different. It means you will understand the markets in a very different way, and it will make a big difference for you. So please do consider taking our cycle analysis workshop.